We're like,
Okay. Hello, everyone. Welcome to another episode of AgriTech Founders Diary, powered by AgriTech Digest. I'm your host, Kenneth Obayuwana. Today, we are exploring a topic that cuts across every impact sector, whether it's agriculture, healthcare, education, or financial inclusion. We often celebrate funding announcements, investment round and milestones. But what we do not talk about enough is what comes next: the hard work of execution, the responsibility that comes with scaling, and the challenge of building a company that creates meaningful impact while remaining sustainable. Joining me in the studio today is Mr. Tolu Femi-Oyewole, CEO of Healthcare Ventures, focusing on expanding access and improving outcome through innovation and technology. While healthcare may seems different from agriculture on the surface, but I can assure you that both sectors have has faced similar challenges and have reached underserved communities. Both sector has also faced serious challenges and navigating infrastructure gaps, building trust, and creating solutions that improve life at scales. So today we'll discuss what it really takes to build an impact-driven company beyond the headlines and beyond the fundings. So joining me in the studio once again is Tolu. Welcome, Tolu, to today's podcast.
Thank you very much, Kenneth. It's my pleasure to be here.
Yeah, we're excited to have you joining us today in the studio. So without wasting time, um, tell us, take us back to where the entire journey started from. What inspired you to build in healthcare? And what problem were you determined to solve when you began this journey?
Okay, thank you very much. I'll just keep it high level. I'm a medical doctor, with 11 years post graduation, and I always say, fortunately or unfortunately, so after 6 years of medical school, you do 1 year internship, right? And a lot of people do their internship in federal hospitals, but I, I would say unfortunately, but fortunately, I did mine at the state level. And what that exposes you is to what the real problem in healthcare in Nigeria is, and how people are not able to get access to very decent healthcare. And you can see the sheer loss of life, literally people dying for those reasons, right? And
Mm-hmm.
then asking yourself, this doesn't make sense. And like I always say that I used to do surgeries, do all of that, but there's so much I can do. I can only save one patient at a time, in my clinic or in the hospital. And for me, what
Yes.
inspired me was, if I'm going to save people, and people might call that savior complex, but not really. It was about the fact that I needed my life to have more meaning. And so if I was going to save more people at scale, then I need to start fixing the system that brings them into that brings them into the situation where they are. And that is why I ventured into the non-clinical part of healthcare, in which I worked with insurance medicine, worked as a sales developer, worked as sales development person, worked in marketing, worked in insurance medicine, all of this trying to learn how is healthcare truly delivered in Nigeria and how can we improve it. And that's what inspired Fortics. It was just us, everything we have learned over the last 5, 6 years. Fortics is 6 years old today, by the way, just today. We started July 1,
Oh,
2020.
great.
Yeah.
That's amazing to hear.
So we're 6 years old today. And so
Wow.
everything we learned prior to that, we brought it together into Fortis. I'm like, okay, fine, this is how we are going to try to deliver dignified healthcare and create more access to this kind of to healthcare at a very large scale. And that's what started Fortis.
Amazing. I mean, that's fantastic. Now, but you've been building for the past 6 years, right? Now, looking back, what are some of the defining moments that convinced you that this was not just a business opportunity, but a mission worth dedicating years of your life to? You've been building in these 6 years. So, yeah, what's been your defining moment so far?
Hmm, that's a tough question, but yeah, I think that one of the I think the defining moment was the commitment of the team I built to it, right?
Okay.
And that's a big deal for me because when we started, you must understand that we started with very, very little capital. But I remember the first head of clinical operations I had, Dr. Anna, a commitment to that work at the beginning when he wasn't even sure that it was going to be anything. And we had a lot of people. My present chief of people started with us 6 years ago on the first day as well. My present COO as well. And all of these people's commitment towards building what we have today was number one a defining moment that people started seeing that yeah, this dream can become our own dream and we're ready to build as well. So that was defining for me that it was just not about me anymore. There are a couple of people were happy to build as well. And then I would say another defining moment was when we started getting, obviously, people started coming around to talk about, and we started pitching our ideas, and everybody's like, oh, yes, I think this is what Nigeria needs. Oh, Femi, Nigeria needs this. Nigeria needs you. Nigeria needs these ideas, and these are people that you look up to. That was also a very defining moment. And when we started seeing patient feedback, our clients' feedback, our vendors, and how people relate with Fortics, for us, it was like we seem to be doing what is needed to be done. And I think lastly, when we started seeing the finances and we started expanding from one unit to the second unit to the third unit to the fourth unit, knowing that we have not even gotten any investment at that point, we're bootstrapping. We have been bootstrapping for the last 6 years, and we could
Wow.
do this. Yeah, we could do all of this expansion. Could do all of these expansions from the money we're making, and for us that was okay. Yeah, this model is definitely working, and I think those were and obviously when our last fundraise, which was our first ever institutionalized fundraising, that was the first time we're ever going to try it, and that we got it at the first try. It again validated that yes, this is a model that works, and this is what committing all your energies into.
I mean, that's fantastic. I won't lie to you. I had friends who have built in the health sector space, right? So I've had friends who have built a hub that connects veterinary doctors
Mm,
um to animal farmers,
mm,
right? And then somehow I don't know why somehow they kind of fade along the line. I've had friends who have built app that connects people to doctors.
mm,
And I myself have also been part of a company before, a health tech company that
mm,
tried to build a app that connect farmers, that connects people to doctors with
mm.
an app. And but somehow these three people, so myself and my friends have built one and we failed. So anyway, I don't know why, but and without top my friends have built their own too, and they all end up failing.
Mm.
So when I see sector, I like I'm scared about it. I'm like, so what's
Yeah.
been the secret? What? Of course, I think now on we did had doctors, right? We're
Mm,
just based on herbs and all that, and we're excited about what we're building. So they just talk with the doctors to come on the platform. You pay
mm,
us per our doctor, like you pay us a fee for using our platform and all that. So we're trying to bring in doctor. But my friend, he had a doctor was a co-founder with him,
mm.
and they failed. So what was the secret for you? What did you guys do?
I think that you're right. Healthcare can be hard. Healthcare is hard, and healthcare is hard, and I think one of the secrets for
Hello?
us, or yeah, hello, can you?
Yes, I can hear you.
Yeah, I was saying that healthcare is hard, to be fair, right? But I think that what has worked for us was because we had a lot of industry insights. And like I said, I've done 360. My partner has been in hospital marketing for 20 years. Um, so we had a lot of industry insight as to what we should actually be doing in terms of what can sell, what cannot sell. How do we manage money? Especially, we knew that nobody was coming to save us, at least in the interim, right? So our financial management had to be very, very conservative. Our risk calculation was we were calculating every risk. We're planning for risks even before they happened, just because we knew that. healthcare doesn't get a lot of capital if we are being honest. And so if nobody's coming to save you,
Mm-hmm.
then you plan for that as well. And then secondly,
Yeah.
um, we play in the real economy and doesn't take anything away from tech. I think that what we are even trying to do. So, fun fact: one of the first telemedicine apps in Nigeria, I was one that gave the inaugural speech. It's been a while.
Oh,
Yeah, I forgot. So I believe in telemedicine apps, but so I've been in that space, and one of the things I quickly discovered was and when HMOs also during COVID, HMOs tried to, and this is inside gist as well, HMOs
mm-hmm.
tried to do telemedicine. So what they were trying to do was, if we could remove paying hospitals from the equation and we're just paying telemedicine guys like your business, it'll be cheaper for us. Do you understand? And it failed
Yeah.
again. It totally failed. And because we need to realize that the patient psychology as at today, they still want to see doctors, right? They want to, and
Mm-hmm.
anywhere in the world, people still want to see their doctors. They still want that human part of it. That's one. Then secondly, you have to build tech on infrastructure. And I always
Yeah.
like to use this example. The reason why fintech took off, right, is because the traditional banks have gotten to a level where, and that's why the traditional banks don't compete with fintechs. Have you ever wondered why First Bank is not bothered about whatever OPay is doing? The reason is
Yes.
because you need us regardless. The only reason why
Mm-hmm.
you're able to fly is because we build the infrastructure for you to fly. And
Yes.
so exactly, so you're going to see something like PayPal, Paystack, and Titan. You're going to see what Wema Bank is doing with all of these payment gateways, and that's because
Mm-hmm.
the traditional banks had the infrastructure for tech to grow on. The problem with healthcare was that yes, we were trying to do health tech, but what was the infrastructure we are growing on? We didn't have that infrastructure. We didn't have primary health centers that were working that, okay, if I get on the app, I can quickly direct you to this clinic that's just 2 kilometers or 1 kilometer away from you or 500 meters away from you. If you get on the app, I'll probably have to send you 2 hours to some hospital. Do you understand? Because even signing up those hospitals,
Yes.
we use those doctors. I know the doctors were going to Japa. Can you really afford the doctors as well? All of these questions and unit economics were a big deal. And so, what Fortics is trying to do is trying to build that infrastructure so that businesses like health tech, health AI can now grow from the infrastructure that we have built on ground. And I think that that's what we are doing differently. That's kind of making a difference at this point. And so, yeah. So I would just say those are the two things that we kind of try to do differently.
Mm. Amazing. It's interesting to see a telemedicine that is working. But I want you to walk us through, for those people listening, right? I want you to walk us through, what do you guys really do? Do you connect people to doctors? Do you, so give us a brief of what you really do
Okay, so
at your company.
yes. So what Fortix do? So we said that we're an asset company, or we're a healthcare holding company, and what we do is very simple. And we took that straight away from facts that were on ground. Now, what were the facts? I'll walk you through industry insights. What are the facts? Number one, we had a lot of private hospitals shutting down, and as at 2024, 50% of private hospitals in Nigeria had shut down. 50%.
Mm-hmm.
Now that and the reason was very simple. Private hospitals stopped being a thing because it was being run by the older doctors. Younger doctors were either going into specialty training or they were leaving the country. Now, so you were losing private hospitals as at a scale of 50%, and then your young doctors just want to find a way out of the country. So what do you have? You have an access problem, and secondly, you have hospitals that are just there and nobody was doing anything with them. And so for us, it was about the fact that you don't need to reinvent anything new. You just need to pick up those old hospitals and bring them back to life. And so what Fortis set out to do was to restore access and increase access, one, by being asset light, by leasing dormant hospitals and bringing them back to life. So that's the first thing we do. We go to dormant hospitals, we bring them back to life. So we restore access to communities that lost access before, and basically we increase access to other people as well. That's one thing. Secondly, we we are creating an integrated ecosystem, meaning that all of these hospitals are able to interact with themselves. Now, what that does for you is that you're able to share resources. what that means is that I can use one specialist across 5 centers, either through telemedicine, either they go there virtually, or I do a referral system within my system. That way, it saves me a lot of money than employing a specialist per unit. That's one level. Second level is that I have a central admin team, so I'm not duplicating admin resources or admin human resources across different centers. So that way, an integrated ecosystem helps me to conserve my cash flow as well, right? And which is a system that I think that Nigeria public sector should be looking at. You can't build an healthcare system that is totally independent of each other. You need to create an ecosystem, and so that's what we have done. So what we have done is number one, we are not building new things. We are just bringing back old and dormant facilities that are shutting down on a daily basis in Nigeria, bring them back to life, restoring access, improving access to people who have lost access or did not have access at all. And then we are creating an ecosystem of these facilities where we are able to reduce costs. And if we're able to reduce costs, then we're able to reduce our price points and bring more people into into the assets that we're providing, because obviously prices is a big problem um, in healthcare. People can't pay for the kind of assets they want. So if we are able to reduce our prices with this our model, then we're able to get more people into assets, and that's what Fortix does.
Great, great, amazing, amazing. Now, you recently raised some funding, so I think this is the part that a lot of people are excited to or want to talk, want to hear. You recently raised some funds from Cascada, and
Yes.
that was amazing. Once again, congratulations on that. All right.
Thank you. Yeah.
I understand the challenge of what it takes to raise funds, right? But what are some of the reality funders really? What are some of the realities funders really talk about after fundraising? Is it whether is it good, operational pressures or accountability or stakeholders' expectations? What are some of those realities funders really talked about after fundraising?
Okay. This is my first time, so I'm going to say that I don't know if this is what other founders faced, but I think that the realities that hit you, number one, is you think that, let me just speak from a point of emotions. You think that you're going to be happy for a long time, but not really. I'm not going to be happy for a long time. The excitement basically just lasts 24 hours, and then the reality hits you. I think the most the most obvious of the realities that hits you immediately is the stakeholder the expectations of everybody. And trust me, that expectations even starts within your team. Do you understand? And then
Mhm.
your team are aware exactly. And then once you, because that announcement is public and people start expecting you to start
Yes.
protecting the company in certain ways. And even your team start expecting wage rise, all of that stuff. And you're wondering that we have not even started the work. Right. And also people are expecting a significant level of growth, right? And that's another thing, that the expectation. And the third expectation is people expect you to start working towards your next race immediately, right? And then that puts pressure on you because you don't want to be like a one-time wonder. Do you understand? Or a fluke. Do you understand? So for
Yeah.
you, you're under pressure to raise again, right? So the stakeholders' expectations can be very daunting because everybody's just expecting something different from you. And then I would say that um, the level of skill that you need to do to prove a point that you know what to prove your model is also a lot of work. And if you are really interested in building a legacy business or a business that makes an impact, this is if you are just interested in fundraising or trade, that's fine. But if you want to build a legacy business and something that's going to make an impact, then the level of work to scale, because when you have one or two units, it's okay, you can manage it. But when you start having seven, because we're projecting about 7 to 8 at the end of this year, 7, 8, 10, 11, 12 units. Now, what you're compounding growth, but you're also compounding leakages, compounding mistakes, compounding gaps. And those gaps are going to show. And so that pressure where you know that growth can actually kill your business if you don't manage that growth properly, that pressure is also there as well. And lastly, your board and investors' expectations is totally different. So before we could just manage with, oh, I know that you did not get this result because you were struggling with this, you're struggling with that. This is speaking about my team members. But now there's no more excuse. You need to deliver. And so switching from a loyalty based working to a purely competence based working ethic is something that also they don't tell you about, because some of your team members might not just fit into your new level of skill, not because they are bad people, not because they are loyal, just because at that level all that matters is competence and delivering results, because it's not just about you anymore. Now you have investors that have come in, they want their money. You have advisory boards that have come in, they're expecting a lot. And so all of those changes can be very drastic for a founder. And it's something that you probably in the community, you need to talk more about it. You need to prepare yourself for it. Hello?
That's so amazing. I'm excited to hear you share some of the expectations after fundraising. Right. But I want to also ask,
Yeah.
many funders spend years trying to raise funding, but once the funding arrives, the real work begins. I mean,
Hmm.
that's what I believe. So that's my belief that, after after the fundraising stage, that's where the real work begins, right? But
Yes.
how do your perspective change after you secure your investment? This funding, how did your perspective change?
Okay, so I'm going to say that fundraising itself is a lot of work, and that and so people will argue. Some people argue in the ecosystem, and I'm sure you're familiar with this argument that people will say that fundraising is your real job. I don't know if you have
Yes,
ever heard that
yes, I
before.
agree. I completely agree. Fundraising is not easy. You can
Yeah,
spend years upon years on it.
literally,
I
because
agree.
yeah,
I completely agree. I can relate to that.
so I'm sure you have heard that. So if you guys say what happens next after fundraising, I'm sure the guys going to be like fundraising again because that's literally my job. so so I think, but for me, I think that the perspective change for me is going to be the fact that I started seeing the business beyond myself, and I felt like at this point you had a lot more to show, much more accountability. Not just so. I think that the simple way to describe it is that you stop feeling so much as an employer. You start feeling like an employee just a little bit, because you have a lot more people to be accountable to, rather than when it was just you without nobody's money and you were just running your business and just surviving on whatever you were making. But when you start taking people's money, it could be debt, it could be equity, it could be convertible notes. Once you have other people's money in, then you are very accountable to a lot of people. And that change can be very drastic, can be very daunting, because like, why do I have to send monthly reports? Why do I have to speak to these guys? Why do I have to go for these meetings? Why are they questioning this? Why are they questioning that? They were not with me in the beginning where I've been building for the last 7, 6, 7, 10 years. So why are they coming out to ask me questions? And so that level of humility to be able to say that, okay, let me at least listen, is something that founders need to be prepared for, especially those that have not raised before. So I think that's what it is. I think that was the perspective change for me.
It's interesting to hear that change, but a lot of people doesn't think that, as an entrepreneur, they don't think that, oh, if you raise funds, they think when you raise funds you're not a big boy. They don't know there's so much expectations that comes with it. I'm happy you mentioned that, as an entrepreneur, some people want to go into entrepreneurship because with the idea that, oh, if I go into entrepreneur, I have all the time, I have all the optionality, I have all the freedom. But they
Yeah,
don't know
literally.
that as an
So
entrepreneur, you're working for, first of all, you're working for your staff, you're working for your investors now. So now you've raised the people you're working for now has increased, not just only
yeah,
for yourself and your staff. You're now working
yeah,
for investors. You need to report, you need to people don't really put those into those perspective. They just begin to see you now like he's a big boy just with some funds. They don't also know that the responsibility as and expectations from your end has also increased.
definitely.
That's what people
Def-
doesn't they don't put those into perspective.
I think,
I might not also be surprised that some people have already been DMing you for, oh, congratulations, give me money, pay your black tax. As we'll see,
you definitely,
you
you
know.
definitely get, and you have to remind them that it's not your money. It's investors.
Yes.
Yeah. I think that
Okay.
a lot of us need to just speak about this a lot more, because I think that
Yes.
what you
Yeah.
just said, and we just laughed about it, has caused a crunch in the kind of amount of investment. I know that it's also affecting people in the agri space as well. I have friends that are agri founders as well.
Yeah.
And amount of investment coming into Nigeria or Africa started dwindling. As a matter of fact, we don't have a lot of pre-seed fundings anymore. And even at seed, you need to prove a lot of traction. And a lot of people are moving to debt-based funding rather than equity funding. And that's because people who received funding, obviously I'm not trying to speak against anyone, but people who have received funding earlier just basically abused the opportunity because they didn't recognize accountability. And now it's
Yes,
affecting
true,
some of us
true.
that are trying to raise now. It's affecting because now you probably will go to what most of them are doing growth stage, debt funding because they just want some form of guarantee to their investment rather than this one way risk that was being done before.
Hmm. Yes, I completely agree with you. In fact, there are some people that thinks that in the in some cycles,
Mm,
people there are some people that think people now raise funds for fun, more
mm,
like a scam game, sort of, where people raise money, they just spend the money for themselves, enjoy themselves, and go back to investors and say, "Sorry, business has folded up."
mm-hmm,
You know,
exactly.
I think was it last year I was watching um Deji, um, Ayo Deji talking about the same thing, how investors need to be careful, especially in the Africa ecosystem, startup
Yes.
ecosystem in Africa, that, oh, they just raise and they increase their salaries, they increase
Yeah.
their lifestyle, and at the end of the day, they come back and say, sorry, money has gone.
The
But
wrong way is
that's,
over. Yeah.
yes, and that's not fair. I'm happy we're talking about this today. But as your company has grown, have you ever balanced the desire to create impact with the need to build a sustainability and scalable business?
Mm. This question put me into trouble because so I work in healthcare. I'm a doctor, so
Yes.
my mentor. I'm just going to make a joke. So my mentor always says, anytime he introduces me to people, he used to say he used to be a doctor, but we have cured him of the disease. And what he's trying to say is that this, if you leave this guy alone, he's going to give people free healthcare. He's going to make people come for
Yeah.
healthcare free. We need to cure him off of that so he can understand that this is a business and it needs to be sustainable. And yes, especially when you deal with real economy, agri, real estate,
Yes.
real estate, healthcare,
Mm-hmm.
logistics, where you need to balance impact and sustainability. That question will
Mm-hmm.
always come up, and it's a question you're going to battle with if you are playing with this economy. In this economy, this is a question you're going to battle with throughout the lifetime of the business. And I think that for you, you just have to understand the lines you cross. And once you are very rigid on those lines, and even if it means saying no to certain kind of investment, right? And that line is up to you. There's no one size fit all question. For me, I know the lines that I can't cross, regardless of the kind of business opportunity or growth that will come from that line. Do you understand what I mean? And because
Yes.
if this business stops creating impact and creating assets for underserved people, and it's turning out $3 billion a year, the question will be, you can as well have done something in AI, and why are you in
Yes.
healthcare? Do you understand what I mean? So if you're
Yes.
going to be in healthcare, then it has to make some impact, as it were, and still find a way. And if I'm doing maybe $1 billion instead of $3 billion, but I'm making impact, I would rather go with that. And that's the way I'm able to find a balance. But people are always going to question that. Your investors will always question that. Your advisory board, and those questions are not bad because, especially if you're a doctor like me, you are more inclined to want to be more impact driven than sustainability driven. But at the end of the day, if you don't have sustainability, then you can't even create any impact, anyways, right? And so, one of the things I've learned over the 6 years is to ensure that the business is sustainable, the model is sustainable, and that's the only way I can actually make impact in the kind of impact that I want. And any other thing I want to do as charity, I just do it personally with my own personal money, right? And so, yes, it's always going to be a complex. There are probably going, especially when playing the real economy, it's always going to be complex. I don't think there's a direct answer at the point where you can find a balance. Now, you always have to question yourself with every decision that you make.
I'm happy on how you're able to answer that for us. I mean, I'm happy to hear that you're able to strike the balance between sustainability and scalability, because if the business is not profitable, cannot sustain itself,
Mm-hmm.
you can make impact with the business as well.
Yeah,
Yes,
100%. Yeah.
yes. So I'm happy you're able to strike that balance there. But what challenge have you faced while trying to scale solutions that serve real people, particularly in an environment where infrastructure, trust, or access remains significant barriers?
I would say the answer to that will be macroeconomy realities. And as a matter of fact, it was so bad that I had to get a macroeconomy advisor. He's a medical doctor as well, but he worked with the Buhari government, the
Oh,
Economic
okay.
Advisory Council. Yeah, yeah, he worked with that council as well. And we had to get a lot of advice on macroeconomy because, and I don't know, I think Agric might not have this problem. I think it's a more healthcare problem. And one of the advice he gave me, which I always give a lot of people, is that see, when you have a microeconomic crunch, which is what we are facing in Nigeria, and we have faced that Fortics has survived two recessions, and I like to always point that out that we have survived two recessions, and for you to survive two recessions, that's a big deal.
Mm-hmm.
And
Yes.
it's because we understood our macroeconomy. And even till now, it's still a major challenge. And I don't want to go into details of how much of a challenge it is, right?
Mm-hmm.
It's not it's a very long podcast, but if macroeconomy basically, and I was saying that something around in healthcare, people spend on healthcare based off of disposable income. That is just the natural, the the demand tendency of Nigerians. So Nigerians spend to healthcare based off disposable income. Now, when there's a macroeconomic crunch, what happens is that disposable incomes crunches as well, meaning that people just stick to survival, right? So meaning that they're
Yes.
just for the basics and there's no disposable income for luxury, for healthcare. Meaning that even if you have the best product in healthcare, people will not put money into that because they simply don't have the money for disposable income. That is a major challenge because even when you provide access to people that are underserved, to people that are trying to make an impact, what if they can't even afford it? What do you then do? Right? And so and you're saying, oh, what about the insurance patients? Yes, people. So let me just show you a transition in our business quickly. When we started, we're making a lot of money from walk-in patients that were paying cash way more than the insurance patients, right? Not because, and the insurance numbers were more than the private numbers. So you can imagine that even though the cash patients were very low in number, they were still giving us more money than the large number of insurance patients that was coming in. But 3 years into the business, it changed. All of the cash paying patients picked up health insurance because the macroeconomy was tough. People were trying to save money, and it was just cheaper for them to go to the insurance, pay a premium, and then come to the hospital. So we had most of our money coming from insurance rather than working patients. Now, when the macroeconomy got worse, the HMOs were not able to pay hospitals regularly. Some of them paid just 4 times a year. Some of them paid twice a year. Some of them paid 6 times a year. So you can imagine that you're providing services all through the year and you're only going to pay 4 times, 3 times us. So you can imagine the kind of cash flow problems you're going to have, right? And so all of these challenges, and you still have to continue to provide access, or people will not have access. And so the microeconomic challenge is a major thing. We hope that the economy gets better. We hope that the government gets it right. But that's a major, especially in the real economy, where you're actually giving back to people. As long as the macroeconomy remains the way it is, it's always going to be a challenge. And businesses need to keep what's called evolving, adapting in any way possible, just to be able to keep themselves sustainable.
Great. I mean, that's fantastic to see how the industry is also moving in that space. But I want to touch a bit on, as a founder, how has your role changed from the early days of building the company to where you are today?
Okay. Okay, I always tell my staff this, my team members this all the time. So when I started, I was operations, I was finance, I was clinical governance, I was literally everything, right? And
Mhm.
I thankfully I had Dr. Anna, who made it easier for me on the clinical front. So I was operations, I was human resource, I was everything. And that evolved from operations, it evolved into me being more on the finance side of things. So every single accountant we employed, I was one that trained them on. So I basically very good with my accounting software, QuickBooks. I'm very grounded in my QuickBooks. I know my accounting principles. Just because if you're bootstrapping, you have to learn everything by yourself because there's no investors' money anywhere. So and you can't afford to employ an ICANN accountant at that level. So you probably gotta learn it by
Level.
yourself. Exactly. So I was basically training every single accountant that we had because I was more on the finance side, ensuring that we are balancing our balance sheet was good, our P&L was speaking good, creating the financial reports and all of that stuff. Um, Lately, I'm basically strategic and fundraising, right? So I'm more of a strategy person now, and I've been able to put all of those roles, finance, operation. I've been able to train people under me as they were growing the company. Most of the leaders we have been in the company from the beginning, so I was able to train them. So I have my COO trained him on operations. My finance guy was trained by me as well. My chief of people has been with me from the beginning. She was optimized as well. So I've been able to give up all those roles to people who now own them and manage them
Mhm.
as well. We have
Wow.
close to 20 something team members at this point. Uh, so we are estimated to have about 150 by first quarter of next year. So we are becoming a very big team and everybody's owning their department. So right now I'm more of a strategic oversight and capital growth. That's what I do now.
Wow. I mean, that's used to see how you're able to manage the entire role. Entrepreneur is not as easy as people think. Oh, I
It's
could
not it's
imagine the
sports.
early stage for you.
It's a
How
sports.
and it's people will not see these things you are explaining, right?
Mm,
What they are seeing now is the results.
mm,
Man, they are not seeing the process, the time,
mm,
managing as in doing juggling from one of this role to the other role, doing everything yourself. Nobody saw those ones. What we are seeing today is
mm,
the um is the results of
mm.
those years. And that's
Yes,
what people are really admiring right now is the results.
yes, definitely. And that's why you always have to pray that the Bible
Yes,
talks about let your profiting be evident to all. That's
yes.
it. Yeah. And another principle I live by is that the an unrewarded genius is a parable of life. One of the
Hmm.
things that said, if you're not rewarded as a genius, people go, oh, he tried though, he did his best, but he had nothing to show for it. That's a very terrible thing. So we can only pray that we keep seeing results as we work very hard.
Yeah, I see. I mean, that's good. But what system, habit, or leadership principle? Now, I know you've talked about some of your principle. Let's
Yeah.
dive deep. What system, habit, or leadership principle have helped you navigate growth while staying focused on the company's mission?
Hmm. Okay. So I'm just trying to save time. So I want to be very succinct about how I answer this question because that
Mhm.
question itself is a old podcast. So I'm just trying my best to try and just I think that every leader has their unique ability of how they lead. And so for me, I'm going to say that I lead my team through collaboration and them owning the task. So two things I do. I make you own your task or own the role, and I'm involved with you at a very personal level. So if you are my leader, I'm going to ask you questions around how is your family, how are you okay, and get involved with you at a very deep level. And also, I give you the autonomy to own your role because I feel like if I'm going to build something that's going to be a national impact, I'm not going to be everywhere. It's impossible. I have
Yes.
my family. I have to be a present husband. I'm a father of two kids. There's no way,
Amazing.
exactly. There's no way I'm going to be everywhere and always available for you guys. So what I can do is to pour myself into these people. And so I'm very big on training. And we have in Fortics, we have a mentorship program where senior leaders mentor junior leaders. That's how crazy we are with with
Hmm.
training. So right now, I think I have three people that team members that I'm mentoring, and we're mentoring them for leadership. Why? Because for us, we need to pour ourselves into the next generation of people that will be, and if we don't do it, it's yes, we're helping them, but we're also helping ourselves if we are being honest. Else we'll become slaves to the business. And do you understand what I mean? And
Yes.
yeah, so I think for me, what has worked is that people have a sense of ownership. And even when we're not able to pay so much, but I always say that you can pay 1 million or 10 million a month and people will still not be satisfied. But you can
True.
pay a little bit less and people have a sense of purpose that, okay, I actually have a purpose in this space. And if you're unable to find the balance between paying and purpose, you have a very demoralized team. And then you're wondering, oh, I'm paying them well. How come they are not doing my business properly? And so for us, I think what has really worked for me is give people a sense of ownership, be involved, let them know you are truly interested in their lives. Do you understand? Even if you have to pretend, but do you let them know that you literally care about them, and give them a sense of purpose within your business. Like I like to use this mantra: you can all dream within a big dream. That's why I tell them you can live your dreams within a big dream.
Mm-hmm. Amazing. I mean, I think I love that quote. We can all live a big dream. You can all live a big dream in a big dream, right?
Yeah, we can all live our dreams within a
Our
big.
dream within a big dream. Ah, amazing. Can all live our dream within a big dream. Great. Okay. I mean, strong companies are built on modern visions. You know, they are built on disciplines and executions, which you and your team have you've been able to imbibe in your team, and we've seen the result today. Now, many entrepreneurs want to build companies that create meaningful impact. What advice would you give founders trying to balance mission, growth, and sustainability?
Yeah, so I think that you, I think that what you need to do is be very open to feedbacks. I think that that's one thing. So one of the things that we founders do is that, okay, so I was talking to my business coach recently, and they went through our expansion plan, um, because for us we always knew how we wanted to expand, right? And for us, we knew what we wanted and how we wanted it. But you know what our business coach said? Okay, let me ask you some few questions and write it, and let us start writing it down. And one of the things we quickly realized was that we were too obsessed with our expansion idea and our business plan that when we started putting to paper and people started asking questions, we're like, oh, okay, this doesn't make sense. Oh, wow, we just said rubbish. But if we didn't open ourselves up to that level of criticisms, and our ego is so attached to the business idea, we won't have seen those potholes, we won't have seen those loopholes, and then we'll have built and scaled based on rubbish that we had in our head. Because to be honest, we will have grown and will have thought we were going to be sustainable until everything collapsed because of those gaps. And so, if you are trying to build something sustainable beyond yourself, profitable, and also make an impact, open up yourself to feedbacks. See, people, you everybody's going to say something, but you know what you have in your heart. What it should not be about so much about the process or the paperwork, it's about the impact they're trying to make. And if it's about making the impact, then I think the process can be adjusted as long as it leads you to the impact point, right? So if you had this idea of how you want to build, but people are saying it doesn't make sense, adjust this, adjust that, keep this, keep that. Always go back to say, okay, let me look at what they have said. Let me pick what works for me. Let me drop this one, and then just readjust. Be open to re-evaluating. If when the pilot is in the air, his ears are still open to understand if he needs to change his course or not. So I think most founders are too obsessed with the destination and whatever process they have in their head, and they are not open to these feedbacks. And the feedbacks might not be nice. It's not going to be nice. People are going to be, some people are very nasty, you understand? But sometimes they might just be saying the truth. And it's just their personality that is nice, nasty, really. So I think that's what you need to do. You need to open yourself up to feedback.
Hmm. I completely agree. A lot of founders don't know how to take feedback. They don't. And as a founder, every founder or every CEO, you should be able to take feedback and be able to implement that feedback. Well, as we begin to wrap up, looking ahead, what excites you the most about the future of impact-driven entrepreneurship across Africa?
I think that a lot of people are looking into the real economy right now. If you're in agri, if you're in healthcare, um,
Yes.
Yeah, I think a lot of people are looking into the real economy right now, especially because nobody is sure of what. So a lot of investment funds are moving to AI. So if you are not doing anything AI in tech, and everybody's not even sure if it's not going to be bust, so a lot of people are looking to the real economy. I think that Africa, especially, we have no. Sorry, I don't know if this is going to be controversial. I think we should spend more time looking into the real economy. We will always do AI, but we need to look into the real economy. And so, what's exciting for me is that attention is shifting to the real economy. We have a lot of good founders in healthcare, coming up and trying to build infrastructure. By trying to help our patients, by trying to help farmers to get their product out to the right market, by trying to do all of these things, which is what Africa truly needs. So it's interesting to see a new generation of founders who are going into real economy and trying to fix the real economy instead of going for fancy. I'm very skeptical. I don't want to cause trouble, but fancy app developments and all of this stuff, fintech,
Yeah,
fintech. Or like, okay, yes, Flutterwave and Paystack are already doing great. Can we just focus on the real economy for now? And so it's interesting to see a lot of founders are actually doing this, and I think that the future is bright.
that's fantastic. That's fantastic. Anyway, Tolu, thank you for joining us today. The future belongs to founders who can solve real problems at meaningful scale.
Mhm.
Thank you really for joining us and for sharing your journey with us. One of the biggest takeaway from today's conversation is that funding is not the destination. I mean, that's just the beginning. There's so much you could do after funding. The real work start after the funding space, and of course, to even raise fund is a hard work. It takes time. That's my takeaway. It takes time to even raise funds. It's work on its own. And building an impactful driven company require more than capital. It requires
Yes.
resilience, leadership,
Mhm.
and execution.
Yes.
A deep
Yes.
commitment and a deep commitment to the people you are serving. Yeah.
Definitely.
So to our listeners, if you are building solutions that create meaningful impact and would like to share your story on AgriTech Founders Diary podcast, fill out the guest intent form link in the episode description. This episode is supported by the AgriTech Investors Group, a highly private and premium community where founders and investors exchange practical insight on building, funding, and scaling impactful ventures across Africa. You can catch this episode and more on Spotify. Until next time, keep building solutions that matters and create impact that lasts. Thank you very much to all our listeners and especially to our guests for taking our time to join us today. We really appreciate you. Till then, we'll see you again. It's bye from us in the studio.
Yeah. Thank you very much, Kenneth. Yeah.
Thank you very much, Mr. Tolu.